Welcome to New Home Insights, the podcast from John Burns Research Consulting. I'm your host, Dean Worley. If you want to follow market trends, demographics, capital, new ideas, and endeavors that touch on housing, we're going to try to make sense of that every couple of weeks. Let's go. Hi, everyone. I'm Dean Worley with the New Home Insights podcast. We talk about pivoting on this show a fair amount, about adapting to change and taking advantage of a new opportunity or discovering some new product or service that is kind of underserved or not being satisfied. Ryan Stroker at Avenue One is kind of going to have a story about a pivot, about a change, about adapting. And that's which, again, we love those kinds of stories. Avenue One is in the capital space, in the single family rental space, but they really are very good at enabling maybe access to capital to some folks that don't otherwise have access to capital. So we'll talk about that and a lot as we move along. Ryan, how you doing?
Doing great, Dean. Thanks for asking.
Let's start with, as we kind of usually start on the show here, is just kind of big picture. Let's first talk about you, Ryan Stroker, and just a little bit about your background, and then leading up to kind of a big picture, 30,000 foot. What does Avenue One do?
So professional background is I have been working really in the capital markets for most of my career. I've done some banking, some trading, some sales, but all in and around institutional capital and helping institutional capital to access price structure opportunities. And I spent the end of my capital markets career at Amherst. And our sister company at the time started kind of in the early 2010, 2011. We were kind of a boutique residential focused investment bank that really leaned on data and analytics. And we did a lot of connecting that large capital to kind of unique opportunities, unique asset origination. And at the same time, our single family team really took off. And so that was my intro to single family rental. I ended up moving over to the sister company at the end of that run to head up acquisitions, and that's kind of the background in terms of how we got to Avenue One.
Yeah. And so big picture, you guys are kind of, Avenue One is kind of that connective tissue between a lot institutional capital, big time money, and a lot of different folks, including some fairly small operators.
Avenue One is the B2B capital marketplace for housing. Just as you said, we connect local real estate entrepreneurs with institutional investors, really with a goal of creating efficiency and making both sides more successful. My background was coming from the mortgage world, which is this efficient $15 trillion asset class. And that's evolved very quickly in the past 30 years. Like that started at early days when mortgage-backed securities were being created and evolved in something that's really quite efficient. And what became super interesting is this realization that institutional investors can very easily access risk on the debt side in this mortgage system. They're pros in understanding housing. They're pros in understanding the risks around housing. And yet there isn't the access to the equity of the same debt that that has been, become so established, really. And it's funny when you compare it to like corporate debt and equity, right? Investors can easily invest in corporate equity as they can in corporate debt. And so it's just kind of interesting that one of the largest asset classes in the world has such little access to that equity.
So what was that spark? I think Avenue One, I believe, was founded in 2020. That smells like COVID from an outsider. Was it what was the spark that you realized, hey, this is something that's not being serviced?
So I grew up with being very aware of what I was not great at. And I'm not great at a lot of things. And one thing I am great at, though, is finding smelling opportunities, smelling inefficiencies. And oftentimes those inefficiencies are frankly extracted by large investors. And that's what we saw, back in 2010 on, is like there was a real disconnect in value around housing. And you saw a bunch of big investors come in and so on and so forth. That's a trade. It effectively was when capital came in, it filled a need, but it didn't necessarily kind of evolve the system, right? It was almost like a Band-Aid to a degree. And a lot of things have changed since then. But the idea of almost optimizing this need, which is so clear, this clear need for large investors to want to come into the space. And there's clear need for local real estate investors, local real estate entrepreneurs to need access to that capital. And to me, like, that was the most obvious disconnect that was right in front of us. And so that was the timing was not ideal.
Yeah.
It was like right at the beginning of 2020, and and I'm happy to dive in a little bit about that.
But it does seem a little bit counterintuitive, doesn't it? I totally get it. Those local real estate entrepreneurs definitely would love that access to major capital, but you can see how it's a little counterintuitive to go the other direction. So that's a need that you saw, that I think you're being modest, because not a whole lot of folks saw that need and saw that as a way to capitalize.
I think they saw it, but their solution was to try to extract. So there's a big difference between extracting and creating, right? The smartest investors in the world are extracting in reality, right? The people who are solving bigger problems because they're not smart enough to extract, this person, is really thinking more broadly. And so it was great. Yeah, this is a trade, but how many times, and this is from personal experience, I traded subprime mortgages at Merrill Lynch back in the glory days. Like, how many times have we seen the ups and downs of asset heavy models with mismatched term truly blow up? I mean, it's happened time and time and time again. And so when I look at the opportunity and how it was extracted back in 2010, 2011, it was what? You went out and raised a bunch of money. You went to go buy those cheap assets. You're not solving anything. And the opportunity is so big that I had the luxury of coming in 10 years later, actually, after it had, all of the tough pieces of the business had been worked out. And to come in with this perspective and say, holy moly, like, I can pick and choose the technology. I mean, this was 10 years of low rates where technology and fintech and prop tech was invested in heavily.
Yeah.
Wow. What could we take from that world? You've seen all these pros who now have been in the space for 10 years. Wow. I could actually go and pick the people that I think are the best after having worked with a lot of them. And thirdly, like, these local pros, real estate investors or home builders, or they have all actually had some experience for 10 years. So it was a huge kind of opportunity in terms of like 2.0 of what is kind of like SFR 1.0.
Was that why the timing? So you're at Amherst from 2010 or so, and in 2020, was it the technology that allowed you to think, okay, we can do this on this mass, fairly granular scale in a way that couldn't have been done even in 2010?
Well, this is one of the things that Sean was so brilliant about. He always was very thoughtful about incorporating or when determining a vision and or an idea, validating it with data, not just data, because the reality is most of the data at the time was not available.
Yeah.
Right. Today, the access to data is almost a commodity, but that was not the case 10 years ago. Yeah. So there's almost like a data arbitrage that Sean led the way on.
Sean Dobson, by the way, at Amherst, friend of the show. That's who you're referring to?
Yep. Sean. Okay. Yep. And like he extracted it. So I came up, I learned a ton from Sean. Like, I came up as I think I was like in my late 20s or something when I started to go work with Sean. And I was so fortunate and so, by the way, like there are a bunch of, we talked to this, there's a bunch of like Amherst Cubs out there. Really. I mean, there's a
Yeah.
lot of
Yeah.
folks who have learned a ton and really gone on to build their own efforts. And so what that culture was kind of like a culture of answering uh, questions or potential questions, but really not letting up, going after, do you have access to the best data?
Yeah. He's like Bill Belichick sprinkling the NFL with head coaches from out of his years at the Patriots, kind of.
Yeah, no, in a lot of ways, for sure.
So technology was pivotal. I want to pivot back to that, but what made you think, SFR? Why the focus on one of your focus on SFR? I know you're in other spaces in that too, but what was about SFR that made you want to go, okay, we need to be big in that space, and that's what I want to focus on. It's single family rental, by the way. Sorry for the acronyms, folks.
I've always been excited about what's possible. And I also want to take advantage of what I've learned over the previous 20 years. And a lot of what I've learned is also establishing myself as a professional in the space. And so I want to take advantage of the relationships and the know-how with those institutional investors who are buying mortgage-backed securities and asset-backed securities. And so to me, anytime I would think about an opportunity more often than not is bringing together two parties. You've got someone who has a problem. It's almost like Wall Street a little bit. They're connecting people who have money and people who need money. And so you need two sides of this equation. And so that was really where I had the anchor side. I had the institutional investors, right, looking to deploy capital. I knew how insurance worked. I knew how NAIC was super relevant to the availability to even put capital out the door. And then I saw this expertise. I saw this expertise in housing. You put all these pieces together, and what you see is there is not, though, this scalable infrastructure or scalable access to this $40 trillion asset class. And to me, I had enough of the boxes checked to for me to think I could actually pull this off.
It's interesting you say that, because one of the things I've noticed in doing the show is that some of the best ideas are those that in hindsight to a lot of folks seem like, well, isn't that sort of obvious? But the difference is that a lot of people can think of ideas is a whole different world to be able to have the expertise, the experience to pull them off, to make them make sense.
Well, pulling it off and having the idea, as I've learned very quickly, are two very different things. And that's probably been one of the most, the best parts of this journey has been the going from, basically like being like a spreadsheet jockey to some degree to actually needing to deliver as an operator. And all of us in the financial services always doubted our ability to do much of anything outside of, arbitraging the markets or being cognizant. And so that's been the biggest leap, but also incredibly rewarding and also incredibly difficult.
Yeah, I bet. And challenging every single day, I imagine. When we were just warming up here before we started recording, you mentioned something to me that's an interesting framework, and I wanted to recapitulate that and have you kind of expand on it. You said, sort of words of the effect of you can't just view yourself and what you provide. You have to think about how the other actors view you. Like, how are you? Who are you to institutional capital? Who are you to home builders? What do you mean by that?
It's funny because you mentioned earlier, like, Ryan, my impression of you is X. And I said that one of the difficulties that we've had is that because we're set up to be an asset light marketplace, but also infrastructure, we have multiple stakeholders.
Yeah.
Right. We've got over 300 local partners who are service providers across the country. We've interacted with, I think, close to 100 medium to small builders. And when I say we've actually interacted with maybe closer to a couple six, 700, but we've actually engaged with about 100. We have a lot of different folks, and that's the whole idea. Is like, to an institutional investor, we represent trust infrastructure. We're SOC 2 certified. We have institutional checks and balances, institutional kind of analytics framework, risk framework. We're managing over $2.5 billion of assets on behalf of some of our great partners. So that's the institutional side, right? We're offering scalable access to cash flowing hard assets, which is not so easy to come upon.
Yeah.
And we do it in a way that's unique to everybody else. We're not a fund.
Yeah.
So we're a for-fee service provider, right? Whereas the gorilla in the room is Pretium. Their main focus in raising capital and partnerships is to LPs, folks that really need a lot of guidance, hand-holding, and outsourced help. The folks that we have set ourselves up to be relevant to are the insurance companies, the private equity, the private credit, but GPs effectively. And so GPs are already charging a promote. And as a result, they need to have, charging a double promote doesn't really work. So we spend a fair amount of time making sure that we act as their operational fiduciary.
Okay.
And it's a real back-to-back. We can't be anything without our capital, and capital needs operations. So there's a great synergy there.
And so you provide. They know what you provide, but you're not by any stretch one size fits all, right? Don't you work with your individual investors to be really specific? Really, what is it you want to go, and how can we help you get there? Are you pretty granular with each and every one differently?
So I'll give you an example of most of the investors that we are dealing with are those that understand housing but don't know the specifics of single family rental.
Okay.
They typically will come in with enough knowledge to think that, hey, being in this space, whether it be debt or equity, is worthwhile. But they don't have the specifics to truly pull the trigger, right? And so there's an incredible amount of education, actually. We're typically working with folks who are not invested in the space. And that's a lot of what I actually took from Amherst, because that's exactly what we did. We would spend hours and hours investing in relationship. It was not about a transaction, right? It was about a partnership. And so what we're doing is, frankly, we are leading with trust and generosity in terms of hey, guys, this is how we would do it. We may not be the best fit for you, but we'd be more than happy to get you up to speed on how to consider this opportunity set. So that's the institutional side.
That's interesting because it does make you realize that when you're inside an industry, you don't realize that. So and I'm in the housing industry, so it's obvious to me that SFR is a really good investment and a growing investment. But that makes sense now. If you ask me about shipping or transportation, and I would have no clue about the nuance of that. So you're still running up against a roadblock of, wait, what's this SFR? How am I going to make money off of that?
Yeah, and it's a lot of people who think about structured credit funds, think about insurance companies, think about private credit. These are all folks who are professionals and understand housing. But they haven't had the ability to even consider housing as a way to deploy capital. Okay. Whereas if they wanted to go out and buy $500 million of mortgage-backed securities, they've got dozens and dozens of investment bankers and or trading floors to call. So that's kind of the way that we approach that from the institutional side. On the other side of the coin, right, is so just doing that, we need to be capable of kind of delivering all of these services necessary from day zero all the way to exit, however many years in the future. That is table stakes, being able to do what I'm talking about. Every other single family operator has to do some form of that. Now they do it in their own way, and they have their own angle, and a lot of them do an amazing job. But the other side of the equation is where I think we've developed real proprietary access and products. So the other side of the coin, like we actually, capital is not as much of the problem. Mm-hmm. Like the opportunity set, having come up in Wall Street, all the knuckleheads who now run these funds are in your cell phone. I'm including the knucklehead on the other side. Like it's a small world, right? The other side is really where the opportunity exists. And that is in the fragmented local real estate markets. Yeah. Yeah. And I think my impression was early when in post-Christ, post-GFC, a lot of Wall Street firms came in and kind of came in and saying, hey, listen, we got all the cash. So we're calling the shots. And it worked for some of the folks on the ground, but there was this funny competition almost with these local pros. So it would be, think about it, right? At the end of the day, this entire $40 trillion asset class is controlled by the consumer. Yeah. Institutional investors are dropping the bucket. They own less than 5% of just investment properties. Yeah. Investment properties are about $4.5 trillion. The rest of the market's 40. There's a drop of equity really owned in the space. So they had to really kind of compete with the local pros, and the local pros are always going to win, and they should. And so our approach was a little bit different. It was, listen, let's embrace it. These guys are the best. These guys are the best on the ground because we're buying homes in their backyard. Mm-hmm. We have to be the best on the other side of turning that and translating that into something that's institutional and standardized. But on the local side, this is really where we really found a niche. We manage about $2.5 billion. We bought more than 50% of that $2.5 billion from local mom and pops. And the average portfolio size was about 16 homes. So we mapped every home in the US. We organized it, coordinated, and really turned it into like a sniper fire to go after the folks who had the assets that matched, rolled up the LLCs. This was a kind of big to do, and a while back. It's now more available, but I think I can safely say that we sourced and acquired more than maybe 5x really anybody else that even came close. So off-market sourcing. Yeah. And that was, frankly, a unique product that we were bringing to these moms and pops.
I'm going to talk about technology and data. I mean, you were able to do what you're able to do, as we mentioned a minute ago, through technology. It really does allow you in a way that surprisingly not that long ago, you really couldn't have done, at least not as efficiently as now. I mean, you're using tech for management, for analytics, for data. You mentioned a minute ago, just now, that you have kind of this enormous data set on, is it literally every home in the US or virtually all home in the US?
Yeah, the answer is yes. However, I almost discount that access today. Meaning, it's not that difficult to go and find all the information on every home in the U.S. It takes some time, but it's doable. It's manageable. We were doing it at Amherst back in 2015, 16, right? So it's not rocket science. The thing that I had the luxury of kind of coming and was seeing how to incorporate that data into your workflow. Okay. That's because you can have access to the data, and how you actually translate that into your operations is the tough part, frankly. Yeah. And that's what we were able to do. We were basically able to take that data, help us prioritize, but then actually identifying, purchasing, closing, renovating, and then managing those homes in a seamless fashion. That was the tough part. So yeah, from a data standpoint, yes, there's a lot of, listen, data is like, I almost, if you're not really strong with data and analytics, like you're that's really table stakes at this point.
Yeah. Yeah. But you do have, I mean, the sourcing is important, right? There isn't, you mentioned ago that you off market sources. Can you talk about that at all? Or is this one of those
Yeah,
you could, but you'd have to kill me
yeah,
things
well, I won't kill you immediately, but
eventually?
yeah, right, in time. So it started with getting to know. Man, I remember the first story, like when we were trying to buy our first portfolio in 2020. It was like literally June or July of 2020, and the seller who owned, it was like a $20 million portfolio at the time. And it was probably close to a 7 or 8 cap rate, which now sounds crazy. And this seller didn't know who the heck we were, right? Wanted to see like our bank account statements. At the time, like our bank wouldn't even, for privacy, like wouldn't, I mean, it was wild, right? So you literally, you had to gain this trust from the local community, and it took time. But what happens is, once you get a couple of those deals done, right, man, everybody's cousins of each other. Like, it's incredible. So we started to actually get phone calls and incoming, and became kind of this trusted place where, hey, these guys are great liquidity providers. Fast forward, and I won't jump over it too much, but that's exactly what we've done with home builders.
Yeah.
And we can talk about the home builders in a little bit, but like that's really the our confidence in our ability to run that playbook with home builders, with local real estate professionals and owners of real estate, is what really gave us the plan for connecting into home builders.
Okay. Well, let's talk about that then. So you are partnering with home builders in a pretty big way. How does that work? What is your impetus for that?
So it started out because we have an equity bid, and an equity bid for single family rentals. However, when rates went up 500 basis points, this gap established between what institutional investors could pay versus what the owner of real estate could get if they sold it to retail, to the consumer. And that gap is about 20 points, which is substantial. And it was not that when rates were much lower. So the ability to source from that same group was no longer there because the bid and the offer didn't connect up.
Okay.
So what we found, however, was that home builders are in the business of moving projects. They need to sell. And what we ended up identifying was, you go call the largest home builders and they are banked by everyone.
Yeah.
That didn't seem to be particularly exciting. You're typically paying the highest price. You're in competition. But if you start calling the folks who are medium-sized and smaller, they are thrilled to get your phone call.
Okay.
And so because we had the ability to buy, from 1 to 3 to 12, all different sizes, that's really been one of our greatest attributes, is the flexibility to work with these local pros.
And is that the main thing that is in it for them, quote unquote, is that ability to move off product, or is there also an access to capital issue?
Well, it's both of those things. Okay. It's really it's consistency, and it's an access to capital, knowing that they have the option to sell to Avenue One and Avenue One's institutional partners. I just clarify, because we're not buying it; we're buying it on behalf of our investors.
Gotcha.
And so, but that consistency has been enormous, and that's really what the trust comes from. That's what's not there. So we started to buy more and more homes from these builders, and these are the smaller guys. So these are like this is like the infill. These are like we'll buy like 12 lots or 12 finished homes. In Charlotte, North Carolina, and it's not 30 minutes outside the outer belt.
Okay.
Like we argue this is some of the best stuff that's available. These builders have had these lots for years and hadn't gotten around to buy or what have you. So there's real value in that ability to aggregate locally and really turn it into something that's more institutional.
And you shared with me earlier something you call the home creation ecosystem and kind of how you fit within that. Are we talking about the same thing when we talk about home builders? What do you mean by that?
So we started with this relationship with these home builders kind of earlier when rates moved. And then what we started to realize was these guys were asking us about financing. They were saying, hey, listen, I know you can buy these homes from us, but I got all these projects.
Yeah.
Right. So for the first time, we almost started to dip into, my world is like my previous world was like post certificate of occupancy. When the home's done, right, all of this financing world exists in a very efficient way. You got Fannie, you got Freddie, you've got the capital markets, you've got securitizations, you've got, non-QM. It's trillions and trillions. But prior to C of O, it's like there's nothing there. It's a bunch of it's a bunch of some large, some small funds.
Yeah.
That's the ecosystem. Every one of those funds underwrites in their own way. We're talking about land acquisition and development and in construction, right? So post entitlement, getting these things approved. So there's a gigantic gap, and there's something like $280 billion of new home product that was created last year. $280 billion, and they don't have an efficient capital market system to facilitate that. So that was the beginning of realizing, you know what, guys, we got to turn this up a notch.
Yeah.
So we took our learnings from going to moms and pops, and I have always been a data junkie, thanks to Sean back in the day. Yeah. And I started really wanting to understand what information is available about home builders. I want to map all the home builders the same way that we mapped the rest of the information.
Okay.
And what I can tell you from personal experience is that it is tough.
Yeah,
and
I imagine.
If it is tough, it means that no one else is doing it. And if no one else is doing it, it tells me there's an opportunity.
Yeah.
So fast forward, we aggregate a bunch of different kind of data sources and now have mapped something like 28,000 builders. And next to each one of those builders is an entire kind of pipeline of pipeline and collateral characteristics of those opportunities.
And that's pretty innovative. I mean, that's something. So you're essentially developing a metric that applies to builders, a risk metric to builders, more or less, or no?
So that would be like step two. So the answer is like, so we're really just honestly, step one, we're just organizing. We're just organizing the information, right? And just having that it was incredible that didn't exist. Then when we started to tap in to see, okay, now we've got the builders. What financing or capital is available to those builders?
Okay.
And then that was even more difficult. Like understanding, we would call these builders, and I was on a couple dozen kind of phone calls with them and saying, listen, where are your capital gaps? Like, where are the problems that you guys are facing? Not only did they not, a lot of them, there's some pros who really know this stuff back and forth, and they're the ones who are building close to 500 homes a year.
Okay. Like
they're banked by the street, and they've kind of but dropping below that, these are local experts and entrepreneurs. They're not capital markets pros. So they're telling us these CEOs are spending 50% of their time trying to figure out where the capital is going to come from to just go do their job.
Yeah.
And that is where the light bulb went off. Like, guys, we got to start really thinking about what products are out there, understanding what the competition looks like, what are the actual gaps. So we actually pretty awesome recently. We spent about 15 hours. We've got 15 hours of like calls with these home builders and have got this incredible knowledge base. We're now, I told you, like, we're working with like some large investors to establish a construction and acquisition and development program that is more standardized, more consistent, and the goal is to have that flow not into a fund but into the capital markets. And that's what we were chatting about so when you start thinking that way, then the question is, well, what's the most difficult piece of this? There's plenty of difficult pieces, but having a standardized approach to determining the credit of a home builder
Okay.
is a big unlock, kind of like we talked about FICO.
Yeah. Yeah. FICO's been around forever. FICO is used for consumers. So is it kind of like developing a FICO for private builders?
Yes, from an investor standpoint, right?
Yeah.
So, if you asked an investor what they think about FICO or how, good FICO, there's going to be different point of views. But the bottom line is that the market, though, has established that there are cutoffs. It's basically a relative value is what it's done, but it's standardized. So the market can evolve and say, hey, we're okay with 720 FICO, whereas in the past we needed 750. But all it is a relative move shift X percent, right? Mm-hmm. It's just the fact that it's all done in a standardized way is the unlock. And so that's what we're working on, or just being aware of the fact that that's going to be necessary in order to really bring efficient capital into this early pre-C of O stage.
You have 28,000 users, though. I know that in terms of the number of builders you just mentioned, which is, though you think about it, is relatively small compared to consumers. So FICO is trying to measure something for millions of people, and it's going to have, FICO is not, if you look, knocking on the hood of FICO, it's not crazy accurate. I would think you'd be able to be more accurate with this kind of measure, given the relatively smaller number of folks involved.
Well, you are correct. With FICO, the thing you run into is P&I, right? And so as a result, when you go look at a mortgage-backed security, you have limited access to the actual underlying collateral.
Yeah,
you're given the loan size, but this, we are a B2B business, right? Our whole goal is to truly enable local pros, whether they are real estate investors, whether they are home builders, whether they're property managers, whether they're brokers, really giving them access to efficient, consistent capital to really unlock that, like enabling these local pros. When I was, one of the key fundamental kind of ideas of this company when Bill Martinair and I started it was my aunt used to bring all the cousins together. I'm the oldest cousin, so as you can imagine, and so just give you a context of how I grew up. And she would always love making people feel great. So we'd go around the room and say, hey, what is, when you see this person, what do you think of this person? And
like your cousin?
Just like all the different cousins basically talk about your cousin.
Each other, though. Okay.
Right. Yeah.
Wow.
And so it was amazing, right? It made you feel great. Well, one of my cousins, when my aunt Nancy goes, hey, Ryan, or Henry, when you think of Ryan, what do you think of? Or how do you feel? Yeah. And he said, I feel empowered. Huh. It was like I've never felt.
How old were you when that happened?
I was probably 15, 16.
Wow. That's amazing. Yeah.
And so it is a wow, right? It's amazing. Right. And so when I think about where I find myself spending my time, I get truly excited for people who are betting on themselves. Like it excites me, and I get thrilled about it. And I love to connect them to things that make it work for them, because I'm so impressed by the fact that they would take the risk to go figure it out themselves. Yeah. And so in a lot of ways, that's how we come into these entrepreneurs. Like it's truly a partnership model. We almost, it almost feels like we're like saying, guys, there's this really cheap capital over here. Like, let us show you how to get it. All you have to do is X, Y, and Z. And that's really like the approach that we've had to get the best out of um, these pros who have all the information.
In terms of the home builder community, the private, smaller home builder community, are you big enough now and established enough now where, like you mentioned a minute ago, someone was asking for your bank account data earlier. Are you at the point now where you're getting those calls because you're trusted you're going to get those deals done?
So the answer is our marketing has been, frankly, limited. We The answer is like yes. Like when we call up these guys, they've heard of us or are aware, and like usually it's amazing. The same idea. You go into Charlotte, you buy homes from a Charlotte builder, and they reference somebody else, and very quickly the same concept kind of happens. So the answer is yes. Like we've actually, I think we have about $8 billion of tapes over the past 9 or 10 months. So like we're getting a lot of, and that's mostly medium to small. We're not really counting the big guys, but that's a lot of product people are looking for capital solutions for. So now, yes, we are now past the point where validation was a big piece of it, right? I mean, we've raised over $150 million from partners with like Westcap and MetLife. We manage about 10,000 properties. And we've got we're in about 20 markets, but we have this ability to be flexible and open up in another market relatively quickly because of that partnership. So all of these parts are needed for the institutional investor, but they don't, the local folks don't really care. It's like, what do you got for me? And that's where I'm really excited to become an established local place to go. Like if you own a home, if you want to go sell it, you got to call a real estate broker. If you want to go get a mortgage, I don't know who you're supposed to call, right? But why do you have to call two different people for equity and debt? Like it's not intuitive to me. It's the same. So like we are uniquely situated to now, we can offer these home builders access to either liquidity capital in the form of equity or financing capital in the form of acquisition and development financing or construction financing. And by the way, then after is easiest. It's kind of like, well, yeah, if you want to get a DSCR loan or a bridge loan, we can do that too. So our pitch to these guys is that, listen, we are your conduit to these institutional players.
Yeah.
Right.
Yeah.
And that's worked out. People have been super receptive about that.
Now, you're a data junkie. I love data. Our company is built on data, but also understanding that data and translating that data. We can sometimes get a little over-reliant on data or maybe a little too trusting for data. When you're thinking about partnering with your private builders, these local builders, are you also looking at qualitative measures? Are you looking into reputation, things like that?
Oh, baby. So not only are we, but we're also kicking the tires about how it is done today.
Okay.
When you underwrite a builder today, I mean, we've actually been through an incredibly large asset manager was asking us for help with some diligence, and literally it got down to us calling the builder and looking for references. I'm like, this is wild. Yeah. Absolutely wild. Like there's got to be a more thoughtful, standardized, quantitative way to have an opinion on the builder's credit quality. And so that has really been really kicked off, and we're establishing, as we establish some of these products, where there are real gaps in the home builder market. We've now got we're actually putting together like a white paper on gaps of capital gaps in this home building segment, right? And to kind of articulate all of these learnings that we had, because to be able to get the attention of these home builders for this much time, and these are great. These guys are telling us all of their problems because one, we're listening. Two, we have the expertise to actually help them. And three, we've proven to be a great partner. Yeah. So to be able to actually aggregate that information, then turn it into a product, that's where that's where I'm incredibly excited.
Yeah. So you're not just a service provider; you're also a therapist.
Well, it's funny you mention that. That's why we've got generative AI to help us with
Okay.
answering questions. Um,
Talk about your problems with the AI. I don't know. I've heard that can go sideways sometimes. Um, so that's a good segue, by the way, for your, I guess, for lack of a better word, your granularity of how you manage things. I mean, you're doing everything, right? In terms of when you're partnering on the local level, going back to the SFR, let's say,
yep.
managing, buying the property, managing the property, renovating the property. Are you working with locals on all those aspects?
Yes. I mean, I'd say one of the things I'm incredibly proud of is, on all of the homes that we've purchased, we've renovated a good majority of them. Our average renovation spend was $40,000.
Okay.
And so, in order to do that, you really need to have an ability to manage those processes and those partners on the ground.
Yeah.
Like, so what did we do? We thought about incentivization, right? We thought about alignment. We thought about accountability. These are the things that we have this unique. Um, we're taking advantage of their local experience and expertise, but then that allows us, but also demands that we focus on managing them, right? So we have a report card, we have a champion challenger model, and it's been incredible to see that when one partner on the ground, outperforms and another doesn't perform, we have the volume ability to go take 500 homes and move them to another partner. And we've done this. And what's been incredible is not only have we seen improvement in performance from the partner we took the homes from, we saw improved performance on the partner we gave them to. So all of a sudden, when you're actually imposing accountability as well as incentivization, it can work.
Yeah.
And that's been a real success story of ours.
Can I share a pet peeve with you a little bit with what you're talking about? Is the word Reno for renovation? I saw something in the TV, whatever, that said beer budget Reno, and I thought it was a microbrewery show in Reno, Nevada, and I was interested, and then I found out people use the word Reno for renovation, and I was annoyed.
You know what? There's it's funny because the Reno world.
The Reno.
So actually, it's so funny when we first started out in the early days. We needed to offer scale. Whatever we did had to be in scale because our key clients were going to be institutional capital, and some of our great folks who I started as a guy named Tim Lee, who worked with me at Amherst. And Tim was like, Stroker, I'm telling you right now, these big regional rental providers are not the solution. Really? It's these local guys. He's like, let me try to show you that these guys are the real deal. I'm like, Tim, let's go. And dude, it was a gigantic success.
Yeah.
Treating these folks like real partners, being clear. We, instead of creating fancy, marketing or even AI at the time, we actually spent time minimizing how quickly we would go pay our partners on the ground.
Oh, yeah.
So instead of net 30, which was normal, net 15 was competitive. We got down to net 3.
Wow.
We were almost like financing. So it just gives you a little bit of context of how we're thinking.
Okay.
Right. And if we had to go spend all of our money to go fundraise on the LP side, we sure as hell would not have the focus or the capability to be thinking about being a fiduciary, an operational fiduciary, to really improve and optimize those necessary pieces of capital being deployed and managed.
You're in, I think, something like 21 markets, but I believe you're in expansion mode, right? I mean, when you think about a new market to enter, are you trying to get really schooled up on it? Or are you more of the, act fast and move fast and break things kind of a mode?
So there's 2 pieces to answer that question. The first part is there's never real fast acting when it comes to deploying capital. In fact, it's usually the opposite. So the decision to go to a new market could be either an opportunity in that market that is then diligenced by some of our capital partners, or it's more proactive where they're coming up with a strategy and we're supporting them fully and to kind of determine to go to that new market.
Okay.
So it's never the decision to do it is not fast acting. The decision to execute on it, traditionally has not been fast acting, because if you are a large owner operator, you just to in order for you to break even in a given city, you need something like 200, 250 homes at a minimum. And that takes a long time and a big investment that you're going to continue to go there, because we've got at least two or three, partners on the ground that are already in those cities. It's just turning it on, right? It's really just now taking advantage of, like, if you think about, we represent something like 20%, let's say, of all of our property manager partners. But think about the flexibility we have by using, the other 80% of cities that they're in.
Yeah.
And they're the local pros, right? Like, they're the ones who are hiring locally, and, we're holding them accountable, but we're also incentivizing them with volume. You guys kick butt. We're gonna keep it going.
Let's end, Ryan, with, I think, a new endeavor. Just tell us what you can about it. But you're doing more, maybe joint venture deals, maybe some more land banking. How has that opened up for you, and what's the plan there?
So this is part of the appreciation that and what we've learned from talking to these builders, right? I mean, you're seeing incredible things happening in the major national home builders. Very recently, you're seeing a lot of folks putting large dollar amounts into hoping to deploy in land banking. The fact that that's happening now, I mean, it's pretty incredible how late to the game everybody is, and yet there's still an enormous opportunity.
Yeah.
Well, just now consider, if you're not a national home builder, like, I actually think of the national home build, or the largest home builders, it's like a pure capital trade, meaning you've seen the roll up, right? The roll up to me is happening because the largest players have access to capital. Like, it's almost a pure capital game. And access to that efficient capital. So anyway, but below the major builders, like, it's just huge gaps.
Yeah.
And so the question for us is, how do we find and create products, and how do we educate investors that we can uniquely facilitate and help to be their eyes and ears for the ongoing of a project. So again, because we're one of the few originators of loans, let's say, or any type of loan, we also have equity operations, right? That's a very unique position to be in, right? What does that mean? It means that if for whatever reason a loan goes sideways, we are uniquely positioned to be able to come in and help with the work out.
And a precious thing too, and with builders, is land, which is always a scarce commodity, especially in some markets. I love that you're, the private builders do need more access to land banking. The public's, one of the motivations is to leverage every dollar of capital into more homes, essentially to build that pipeline than they otherwise could. Private builders are going to need that kind of help for sure to compete against those guys.
What's tough to really appreciate is that we're up against a incredible housing shortage, and people know that we need more housing. They know that the only people that are going to actually go help solve this are builders.
Yeah.
Yet the solution, or a solution, typically people are looking for either the federal or states to kind of come in and solve. But in our purview, like, this is creating access to consistent capital is oftentimes like the root cause of the problem. It's not a symptom. Like, if you think about all of the symptoms that a lot of companies are trying to work on, which is like high commissions in real estate, right? Housing shortages is a symptom, like title, red tape, and illiquidity. Well, the thing that institutional kind of necessity of standardization does is it actually enables capital to flow. And so that's kind of how we are positioning ourselves, thinking that, hey, we're in a pretty unique spot with local operations and connectivity to institutional capital to kind of bring those two sides together.
Yeah. Well, ultimately, you're easing access to capital for folks who need that. And that's great. I applaud you for that.
it really is fun to see the stories of these local entrepreneurs and what we've been able to help them do by um, bringing them capital that we living in New York City, it's here.
Yeah.
It just needs to be brought to
There's
the other
plenty
side.
of it. Let's
And that's the
distribute
whole
it.
game, is like the fragmented roll up,
Yeah.
or being able to do those smaller checks.
Yeah. I love that.
So that's kind of the thought.
Awesome. Ryan, thank you so much for coming on the show. This has been, as always, I say this every time, I meet it every time. I learn a lot. I love talking with you folks. I appreciate it.
I appreciate, Dean. Thanks so much for the time.
Absolutely. This has been Dean Worley for the New Home Insights podcast. We'll see you guys again in a couple of weeks. Since you forgot to hit the stop button, I'm going to take a second to tell you about our weekly Building Market Intelligence newsletter. Over 40,000 smart folks get these timely takes on the housing market in their inbox every week, and you can too by heading to jbreg.com/subscribe and signing up.